Hey, welcome back to Hedge and Haven, your ultimate guide to mastering the world of high finance and luxury living. If you're passionate about hedge funds, offshore banking, luxury real estate, private jets, or just dreaming of joining the ranks of the ultra-wealthy, you've landed in the right place. Today, we're diving headfirst into the biggest financial earthquake of 2025. President Donald Trump's jaw-dropping 245% tariffs on Chinese goods that are turning the global economy upside down. This isn't just a policy, it's a high-stakes power play that's making billionaires richer, crashing stock markets, and hitting your wallet harder than ever. Whether you're an investor in New York, a luxury enthusiast in London, a finance pro in Sydney, or building wealth in Zurich, this tariff war is rewriting the rules of money. Picture this: designer handbags and iPhones jumping 40% in price, global markets losing trillions overnight, and hedge funds raking in 20 to 30% returns by capitalizing on the chaos. The burning question is, are billionaires winning big while you're left holding the bag? In this video, we're breaking it all down. What Trump's tariffs mean, who's cashing in, who's getting crushed, and most importantly, how you can protect and grow your wealth in this wild new world. Stick around till the end for 4 actionable strategies to stay ahead. Whether you're in the United States, United Kingdom, Australia, Canada, Germany, France, Norway, Switzerland, Denmark, or the Netherlands, grab a coffee or a glass of champagne, because this is going to be a deep, thrilling dive into the heart of global finance and power. Let's get started. It's April 2025. And the world is gripped by a trade war that's unlike anything in modern history. Donald Trump, sworn in as the 47th president on January 20th, 2025, has unleashed a policy bombshell that's sending shockwaves from Wall Street to Shanghai. He's imposed a staggering 245% tariff on all Chinese goods entering the U.S., with some sectors facing up to 300%. Let that sink in. A $100 product from China now costs $345 to import, making it nearly impossible for businesses to bring in Chinese-made goods. This is the highest tariff rate since the Smoot-Hawley Tariff Act of 1930, which deepened the Great Depression, and it's not just a policy, it's an all-out economic war. Trump's reasoning is rooted in his Agenda 47, a 46-point campaign manifesto released between 2022 and 2023 to Make America Great Again. He argues that China has been exploiting the U.S. for decades, flooding markets with cheap goods, stealing intellectual property, and killing American jobs. On April 9, 2025, he took to Truth Social, declaring, "China has shown a lack of respect for global markets." That's vintage Trump, bold, brash, and unafraid to shake the foundations of global trade. His goal is ambitious: force multinational corporations to move factories back to the U.S., create millions of jobs, and revive industries like steel, technology, and manufacturing. In 2024, U.S.-China goods trade was worth a colossal $650 billion, making China the U.S.'s third-largest trading partner after Canada and Mexico. Trump's betting that by making Chinese imports prohibitively expensive, he can redirect that money to American businesses, supercharging the economy and cementing his legacy as the president who brought manufacturing home. But this gamble is causing chaos on an unprecedented scale. Global supply chains are grinding to a halt, with ports from Los Angeles to Rotterdam backed up with cargo ships unable to unload. The cost of everyday goods is skyrocketing, from sneakers to electronics, and businesses are scrambling to find alternatives. For Hedge and Haven viewers, this hits right where it hurts. The luxury lifestyle you aspire to, that designer handbag from China, say a Gucci or Prada piece that cost $2,000 last year, is now hitting $2,800, a 40% price hike driven purely by tariffs. An iPhone that retailed for $799 could climb to $1,142 by mid-2025, making your dream tech upgrades a lot pricier. These aren't just numbers. They're a direct assault on the aspirational lifestyle our audience in the US, UK, Australia, and beyond cherishes. Imagine strolling into a boutique in Paris, Sydney, or Oslo and seeing price tags that make your eyes pop. That's the reality we're facing, and it's not just about shopping sprees. Investors are feeling the heat too. The stock market took a brutal hit after Trump's tariff announcement, with a 10% drop between April 7th and 9th, 2025. Trillions of dollars vanished from global markets in just 48 hours, wiping out gains for countless portfolios. If you've got money in companies tied to Chinese imports, think Apple, Tesla, or fashion giants like Nike, your investments are likely taking a beating. Retailers like Walmart, which source 60% of their goods from China, are warning of price hikes that could ripple through every store, from New York to Amsterdam. But here's the twist that makes this so fascinating. While most people are panicking, some players are thriving in this chaos, and they're the ones Hedge and Haven viewers need to watch. Hedge funds, the beating heart of our channel's world, are making bold bets that are paying off big time. Funds investing in US-based industries like manufacturing, steel, and energy are seeing 20 to 30% returns in Q1 2025. Why? Trump's tariffs are shielding American companies from cheap Chinese imports, giving them a competitive edge. Take US Steel, for example. Its stock has surged 25% since January as investors bet on a manufacturing boom. Caterpillar, a heavy machinery giant, is up 18%, fueled by demand for US-made equipment. Energy stocks are another hotspot. Companies like ExxonMobil and Chevron are riding high, with analysts predicting a 40% spike in domestic energy stocks by Q3 2025 as Trump's deregulation opens federal lands for drilling. Hedge funds are pouring billions into these sectors, capitalizing on Trump's Made in America push. Picture a hedge fund manager in Manhattan sipping a $200 glass of whiskey, watching their portfolio soar while others scramble. That's the kind of opportunity this chaos creates, and it's why Hedge and Haven exists, to help you think like the ultra-wealthy. But it's not all rosy. Funds tied to Chinese supply chains or global retailers are bleeding cash, with some reporting 15% losses this quarter. If you're invested in companies like Target or Best Buy, which rely heavily on Chinese imports, you're feeling the pain. This is where the ultra-wealthy shine. They pivot fast, ditching losing bets and doubling down on winners. For our viewers in Canada, Germany, or Norway, this is a wake-up call. The smart money moves before the storm hits. Let's zoom out and look at Trump's broader protectionist agenda, because these tariffs are just one piece of a much bigger puzzle. His Trump Reciprocal Trade Act, signed into law in February 2025, is a game changer. It promises to mirror tariffs imposed by other countries. If the EU, Canada, or Australia taxes US goods at 10%, the US hits back with the same rate. This has already led to a 10% tariff on all foreign goods entering the US, with plans to scale up to 20% by 2026. The impact is staggering. Every American household is facing an extra $1,300 in costs this year, according to the Tax Foundation. For our audience in the UK, France, and Denmark, this means pricier American exports. Think bourbon, Harley-Davidson motorcycles, or even Apple products assembled in the US. European exports to the US are projected to drop by 15% in 2025, costing billions and straining transatlantic trade ties. If you're in Germany or the Netherlands, you're already seeing higher prices at car dealerships and tech stores. Posts on X are buzzing with reactions. Some users, like @VigilantFox, call it economic domination, praising Trump's tough stance, while others, like @Jason, warn of global chaos and supply chain breakdowns. The US dollar hit a 3-year low in April 2025 as investors dumped assets, signaling fear of a broader trade war. For Hedge and Haven investors, this volatility is both a risk and an opportunity. Safe haven assets like gold are up 31% since January, and offshore accounts in Singapore and the Cayman Islands are seeing a 20% surge in new openings. If you're in Switzerland, Norway, or Australia, these are strategies you'll want to explore to protect your wealth. China's not sitting idly by. They're fighting back with a vengeance. On April 11, 2025, President Xi Jinping retaliated with a staggering 300% tariff on US goods entering China. A $50 American product now costs $200 to import, effectively freezing U.S. exports to one of the world's biggest markets. Xi's message was defiant. China is not afraid. Chinese state media went into overdrive, reviving a 1953 Mao Zedong speech declaring, "We will never yield." That clip exploded on Weibo, with 70% of posts cheering Xi's tough stance and framing the U.S. as a bully. China's economy relies heavily on the U.S. as its biggest export market. 17% of their $3.8 trillion exports in 2024 went to America. With Trump's 245% tariffs, that market's essentially gone, and experts predict U.S.-China trade could plummet by 90% by the end of 2025. This is costing Chinese companies hundreds of billions, from tech giants like Huawei to luxury manufacturers supplying brands like Louis Vuitton. For Hedge and Haven viewers, this means even more pain for the luxury goods you love. High-end watches, electronics, and fashion items from China are now 30 to 40% pricier across your markets: US, Australia, France, and beyond. If you're in Paris or Copenhagen, expect boutique prices to sting as supply chains buckle under the weight of this trade war. Imagine trying to buy a new Rolex or a custom-tailored suit, only to find the price has jumped by thousands. That's the new reality, and it's hitting aspirational buyers hardest. China's playing a sneakier game too, and it's one that could reshape entire industries. They've slashed exports of rare earth minerals to the US by 60%. These minerals, things like neodymium and dysprosium, are critical for manufacturing smartphones, electric car batteries, wind turbines, and even military equipment like missiles. The US depends on China for 80% of its rare earth supply. So this move is a body blow to American tech and defense industries. Picture the ripple effects. Delays in iPhone 16 launches, Tesla Model Y production stalls, or even Pentagon projects like next-gen fighter jets put on hold. For our viewers in Canada, Denmark, and Germany, who often invest in tech stocks, this is a major red flag. Companies like Apple, Qualcomm, and Nvidia could see 10 to 15% stock dips as their costs skyrocket and supply chains falter. If you're in Oslo or Amsterdam, you might be wondering how this affects your Tesla stock or your tech-heavy portfolio. The answer? It's not pretty, but there are ways to hedge your bets, and we'll get to those later. For now, know that China's rare earth ban is Xi's way of flexing his muscle, showing the world that China can hit where it hurts. But it gets even scarier, and this is where hedge and haven investors need to pay close attention. China holds $761 billion in U.S. Treasury bonds, making it one of the largest foreign holders of U.S. debt. If Xi decides to start selling those bonds, a move experts call the nuclear option, it could crash the U.S. bond market, send interest rates soaring, and trigger a financial crisis. Higher interest rates mean pricier loans, whether you're financing a luxury penthouse in New York, a yacht in Sydney, or a private jet in Zurich. Mortgage rates in the U.S. are already climbing, with 30-year fixed rates hitting 4.8% in April 2025, up from 3.5% a year ago. For our viewers in the UK and Canada, this could push global bond yields higher, making it tougher to finance that dream villa in London or Toronto. While Xi's holding off on the nuclear option for now, the threat looms large, and it's keeping Wall Street and hedge and haven investors on edge. This is why offshore banking is booming. 20% more accounts are being opened in Singapore and Dubai as the ultra-wealthy hedge against volatility. If you're in Switzerland, the Netherlands, or Norway, an offshore account could be your ticket to stability in this turbulent market. This tariff war isn't just a US-China showdown. It's dragging the entire world into the fray, and the fallout is reshaping global markets. Countries are being forced to pick sides, and it's creating a geopolitical mess. China's wasting no time building its own economic bloc to replace the US market. Between April 14th and 18th, 2025, they signed massive trade deals with Vietnam, Malaysia, and Cambodia, aiming to boost trade with Vietnam alone to $150 billion by 2030. This is China's way of saying, we don't need America. We've got our own team. Russia and Iran are jumping in too, offering trade agreements and diplomatic support, which makes this feel like a new Cold War with economic battle lines drawn. Meanwhile, Trump's struggling to rally his allies. His 10% tariffs on EU goods have infuriated Europe, and leaders in Germany, France, and the UK are pushing back hard. They've restarted trade talks with China to offset their losses, and the data shows the damage. European exports to the US could drop by 15% in 2025, costing billions. For Hedge and Haven viewers, this creates both risks and opportunities. European luxury, properties, think chateaus in France or penthouses in London, might see 10 to 15% price drops as investors pull back, creating deals for savvy buyers in Norway, Denmark, or Australia. But Asian markets like Singapore and Hong Kong could boom with 12% growth as China redirects its wealth. Hedge funds are already pouring cash into Southeast Asia, and if you're in Switzerland or the Netherlands, this could be your next big move. Let's bring this back to Trump's broader Agenda 47, because the tariffs are just one part of his ambitious plan to reshape America. Beyond trade, he's pushing what he calls the largest mass deportation program in history, targeting an estimated 11 million undocumented immigrants living in the U.S. On his first day in office, January 20th, 2025, he signed executive orders to block asylum seekers, reinstate the Mexico border emergency, and designate drug cartels as foreign terrorist organizations. The Laken-Riley Act, named after a murdered Georgia student, was signed into law to toughen penalties for illegal immigration. Deporting 11 million people is no small feat. It's estimated to cost $400 billion and require hiring tens of thousands of federal agents. For investors in the US, Canada, and Australia, this could mean significant volatility. Industries like construction, agriculture, and hospitality, which rely on immigrant labor, could face 10 to 15% cost hikes as labor shortages hit. But there's a flip side. Real estate in border states like Texas is seeing a 10% price spike as investors bet on domestic growth and infrastructure spending tied to border security. If you're in Germany, France, or the UK, this volatility might make US property deals tempting, especially in high-growth areas like Austin or Dallas. But legal challenges are a hurdle. 430-plus lawsuits have already been filed by the ACLU and other groups, arguing that Trump's immigration orders violate constitutional protections. Hedge and Haven tip: diversify into stable markets like Singapore or the Cayman Islands to hedge against this uncertainty. Deregulation is another cornerstone of Trump's agenda, and it's a goldmine for Hedge and Haven investors who know where to look. Trump has established the Department of Government Efficiency, DOGE, led by billionaire Elon Musk, with a mandate to slash federal spending and fire career civil servants. Mass layoffs are already underway, with 10,000 federal jobs cut in Q1 2025. Trump's also revived his 2020 Schedule F executive order, which makes it easier to replace bureaucrats with loyalists, aiming to dismantle what he calls the deep state. This is controversial. Critics warn it could politicize the government, while supporters say it's long overdue. For investors, the real opportunity lies in Trump's rollback of Biden-era environmental regulations. He's opening federal lands for fossil fuel exploration, despite U.S. energy production already at record highs. This could push oil and gas stocks up 40% by Q3 2025, making them a hot pick for Hedge and Haven viewers in Australia, Canada, and the Netherlands. Energy ETFs like the Vanguard Energy ETF are already up 15% since January, and hedge funds are betting big on companies like ExxonMobil and Occidental Petroleum. But there's a downside. Trump's tax and spending plans could add $5.8 trillion to the federal deficit over 10 years, according to the Penn-Wharton budget model. Higher deficits mean higher interest rates, which could hit luxury real estate loans hard. If you're in Norway, Switzerland, or the UK, keep an eye on bond yields. They're climbing fast, with U.S. 10-year Treasury yields hitting 4.2% in April 2025. Tax cuts are a fan favorite in Trump's playbook, and they're music to the ears of Hedge and Haven viewers chasing the billionaire lifestyle. Trump's pushing to extend the 2017 Tax Cuts and Jobs Act, which slashed corporate taxes from 35% to 21%. He wants to lower them further to 15%, making the U.S. one of the most business-friendly tax environments in the world. He's also proposing to eliminate taxes on Social Security benefits and tips, a boon for retirees and service workers. For high earners in the US, UK, and Canada, this means more disposable income to splurge on luxury goods, private jets, or that chalet in the Swiss Alps. Imagine having an extra $50,000 in your pocket to buy a new Rolex or fund a yacht charter in the Mediterranean. But there's a catch. The $5.8 trillion deficit increase could fuel inflation, eroding your purchasing power. The IMF predicts a 0.5% global GDP drop due to Trump's tariffs, and inflation's already pushing luxury prices up 30 to 40%. For investors in Denmark, Germany, and France, this means pivoting to safe haven assets. Gold's up 31% since January, and gold ETFs like the SPDR Gold shares are a smart bet. Offshore banking in the Cayman Islands is seeing a 20% surge as the wealthy hedge against inflation, perfect for our Swiss, Dutch, and Norwegian audience. Trump's cultural and social policies are stirring controversy, and while they might seem less relevant to hedge and haven viewers, they're moving markets in unexpected ways. He's cracking down on what he calls woke ideology, threatening to defund schools and universities that push progressive agendas like critical race theory or gender studies. He's also banned federal diversity and inclusion programs, arguing they're divisive. This has sparked protests in cities like New York and London, but it's resonating with his base. Trump's also floated futuristic ideas like freedom cities on federal land, new urban hubs free from regulation, and investments in flying cars, though these plans are vague and lack funding details. For investors in the US and Australia, freedom cities could be a speculative real estate bet, but it's risky without clear timelines. Health policy is another wild card. Trump's allied with Robert F. Kennedy Jr., a vaccine skeptic, to reform food and health systems, raising fears of public health setbacks. This could hit pharmaceutical stocks, with companies like Pfizer and Moderna facing 5 to 10% dips if vaccine trust falters. For hedge and haven viewers in Canada, France, and Germany with pharma-heavy portfolios, this is a signal to diversify. Hedge funds are already shorting pharma and going long on consumer staples, expecting a shift in spending. The global fallout from Trump's tariffs is reshaping economies far beyond the US and China. Europe's furious, with 15% export drops to the US hitting Germany, France, and the UK hard. Imagine a Mercedes-Benz factory in Stuttgart scaling back production, or a French winery in Bordeaux losing its US market. That's the reality. China's building new trade blocs, with deals signed in April 2025 to boost trade with Vietnam, 150 billion goal by 2030, Malaysia, and Cambodia. Russia and Iran are offering support, creating a rival economic axis. India and Japan are caught in the middle, holding trade talks with the US, but wary of angering China. For hedge and haven investors, this means rethinking your strategy. Southeast Asian markets like Singapore and Malaysia could see 12% growth in 2025 as China redirects wealth, making them a hot pick for hedge funds. If you're in Switzerland, Norway, or Australia, ETFs focused on Asian equities are worth a look. Meanwhile, European luxury properties, think villas in Tuscany or apartments in Paris, are seeing 10 to 15% price drops as investors pull back, creating deals for buyers in Denmark, the Netherlands, and the UK. But volatility is a risk. Global markets are jittery, and the US dollar's 3-year low is spooking investors. Let's talk about the winners and losers, because this tariff war is creating stark divides. Billionaires with hedge funds betting on US industries are cleaning up, 20 to 30% returns on steel, energy, and manufacturing. Picture a fund manager in Greenwich, Connecticut, toasting to a $100 million profit while markets crash. Companies like US Steel, Caterpillar, and ExxonMobil are their darlings, and they're riding Trump's protectionism to the bank. But retailers tied to Chinese imports are struggling. Walmart, Target, and Best Buy are facing 10 to 15% cost hikes, which they'll pass on to consumers. Luxury buyers in the UK, France, and Australia are losing out as prices for designer goods soar 40%. Small investors with undiversified portfolios are at risk, especially with a 40% recession chance looming by 2026. Posts on X capture the divide. Some praise Trump's chaos strategy, Vigilant Fox, while markets rallied when Treasury Secretary Scott Bessent hinted at tariff cuts on April 23, 2025. For Hedge and Haven viewers, the lesson is clear. You can't afford to sit still. The ultra-wealthy are pivoting, and you need to keep up. The risks are mounting, and they're what keep Hedge and Haven investors up at night. The IMF warns of a 40% U.S. recession risk by 2026, driven by tariff-fueled inflation. Every American household is already paying $1,300 more this year, and global merchandise trade could drop by 0.2%, hitting industries from tech to luxury. Legal challenges are piling up. Trump's 70 executive orders in his first month face 430-plus lawsuits with groups like the ACLU arguing they violate constitutional rights. His plan to end birthright citizenship, part of Agenda 47, is a constitutional long shot requiring a two-thirds congressional vote or a constitutional amendment. Critics call Agenda 47 authoritarian, warning that expanding executive power could undermine democracy. Pew Research shows only 35% of Americans expect Trump to be a successful president, with 31% unsure and Democrats expressing no confidence in his ethics. For investors in the US, Canada, and Germany, this uncertainty screams one thing: diversify. Gold ETFs, up 31%, and offshore accounts in Singapore are must-haves. If you're in Norway, Switzerland, or the Netherlands, these are your shields against the storm. So how does Trump's agenda fit into all this? His Agenda 47 is a sprawling vision with 46 policy videos outlining everything from trade to education. Tariffs are the headline, but he's also pushing deregulation, tax cuts, and cultural shifts. The Department of Government Efficiency, DOGE, is slashing federal spending with $2 trillion in proposed cuts over 10 years. This could boost markets short-term, but risks long-term deficits. Trump's energy policies are a boon for oil and gas, but environmentalists warn of climate setbacks. His tax cuts, 15% corporate rate, no taxes on tips, favor the wealthy, but the $5.8 trillion deficit could spike inflation. For Hedge and Haven viewers, this is a mixed bag. Lower taxes mean more cash for luxury purchases, but inflation could erode your gains. Hedge funds are betting on domestic ETFs, with the Vanguard Industrials ETF up 15%. If you're in Australia or Canada, these are low-risk ways to ride the wave. Let's meet a real-world example to bring this home. Imagine Sarah, a 40-year-old hedge fund analyst in Chicago. She saw Trump's tariffs coming and shifted her funds portfolio in late 2024, shorting Chinese tech stocks like Alibaba and going long on U.S. energy giants like Chevron. Her fund's up 28% in Q1 2025, and she's eyeing a new beachfront property in Miami. Then there's Michael, a small business owner in London who sells luxury watches. He's struggling as Chinese-made components now cost 40% more, forcing him to raise prices and lose customers. Sarah's winning because she pivoted like the ultra-wealthy. Michael's losing because he didn't. Hedge and Haven viewers, which one do you want to be? The ultra-wealthy don't wait for chaos, they profit from it. What's the future hold? If Trump's tariffs succeed, they could bring manufacturing back to the U.S., creating jobs and boosting real estate in states like Texas, up 10%. But if China escalates, say by dumping its $761 billion in U.S. Treasury bonds, interest rates could soar, crashing bonds and luxury loans. A Trump-Xi deal could ease tensions, but both leaders' egos make it unlikely in 2025. The IMF's 40% recession risk is real, and global GDP could drop 0.5%. Hedge funds are shorting Chinese stocks and going long on U.S. energy, expecting 20 to 30% returns. For Hedge and Haven investors, the playbook is clear. Act now or get left behind. Let's get practical. How can you protect your wealth in this tariff war? Here are 4 strategies inspired by the ultra-wealthy to help you win in 2025. First, invest in US-based ETFs. Trump's tariffs are boosting American industries, and ETFs like the Vanguard Industrials ETF are up 15% since January. Low risk, high reward. If you're in the US or Canada, this is a no-brainer. Second, diversify with offshore accounts. Singapore and the Cayman Islands are seeing a 20% surge in new accounts for stability and tax perks. For our viewers in Germany, Denmark, or Switzerland, a multi-currency account can hedge against currency swings. Third, bet on safe havens. Gold's up 31%, with another 10% jump predicted by Q4 2025. Start with gold ETFs like SPDR Gold Share or physical gold through trusted dealers. Fourth, explore Southeast Asian markets. With China's trade deals driving 12% growth in Vietnam and Malaysia, ETFs like the iShares MSCI Emerging Markets ETF are gaining traction. If you're in Australia or Norway, this could diversify your portfolio. These strategies aren't just for billionaires. They're for anyone who wants to think like one. Want more tips? Drop a comment and tell me what you're investing in right now. Trump's 245% tariffs are a game changer, creating a world where billionaires profit while others struggle. Luxury prices are up 40%, markets are volatile, and a 40% recession risk looms. But now you know the secrets: how hedge funds are cashing in, where to invest, and how to stay ahead. If you found this video helpful, smash that like button, hit subscribe, and turn on the bell icon so you never miss our weekly dives into high finance, luxury real estate, and offshore banking. What do you think? Will Trump's tariffs make you richer or poorer in 2025? Drop your thoughts in the comments and let's get the conversation going. Check out our playlist for more on hedge funds, private jets, and the billionaire lifestyle. Thanks for watching, Hedge and Haven fam. Stay smart, stay wealthy, and I'll see you in the next one.